So the data shows that as of January 1st, Canada's population growth hit a 66-year high and became home to over 2.6 million temporary residents, which has basically doubled in just the past couple of years. That's right. Non-permanent residents now make up 6.5% of our total population, which according to Immigration Minister Mark Miller,
guess what?
He now needs to get it down to 5% by 2027. Now, that may not sound dramatic, but when we look closer at the numbers, I think you're going to be surprised. Now, in this segment, it's important. So I want to start by giving you an overall framework for our current immigration and then share some of my own thoughts on why we're likely going to see segments of our economy and some regional housing slow down. And I'm going to say, I think it's going to slow down quite dramatically over the next 12 to 18 months, maybe 2 years, but we need that heads up.
I'm listening.
Now, first, I want to step back and look at our current immigration policies, which is that our federal government has about 500,000 as a target or a cap on permanent residents every year. And as we all know, we've actually seen population growth balloon by almost 1.3 million in just the past year, which of course, JG and I've shared these numbers on the show many times. So if you're wondering how we went from 500,000 to opening the gate to 1.3 million, the answer is in the non-permanent resident cohort, which we've been letting through the gates, which are mostly made up of permit holders, international students, and then of course, Ukrainian refugees who get a lot of press, but relatively speaking, are a fairly small part of the overall numbers. Now, here's the thing. When we came out of the pandemic, we had a really tight labor market and a huge amount of job vacancies that needed to be filled, which is when we saw the temporary workers start to be fast-tracked into the country. I mean, to the point that in the last couple of quarters, we saw that group grow by about 190,000 people quarterly, which actually drove our population growth by about 2% annually. And that's just temporary workers. Now, as you know, that is really great for us as rental housing providers. But then we have to add international students whose growth was blowing up on top of all the temporary workers, which is a whole other dynamic. Now, it was originally set up that population growth would be way slower and was actually intended to adjust for the economy, which is to say that as the economy expanded, which it did, and the labor market tightened, which it also did, demand for temporary workers would naturally grow. And that what was happening post-pandemic. But then we say, and actually we saw inflation start to speed up, and that was when the Bank of Canada increased rates a lot. And then, of course, very quickly, which we're all very aware of, and then the lag effect of that move has now begun to slow the economy, which was, of course, the original intention. But now it seems our government has finally clued into the reality that we don't need and we can't handle the current level of non-permanent resident immigration.
Who can even? It's literally impossible to can.
So the level of immigration has become quite apparent. We're seeing tent cities start up, we're seeing rents escalate, we're seeing people having to live together, live on the streets. All of that is happening. So what's starting to unfold in the private sector payrolls is that they're actually declining on a 6-month basis, and job vacancies have actually been dropping. We're seeing that in terms of many who are looking for trades. All of a sudden they can find those trades. And if we add to that, there's a recent survey by the Canadian Federation of Independent Businesses that is showing that the business owners are saying that the shortage of labor is no longer an issue. They're finding the people they need. And we're also starting to see, or at least hear about, the lineups of people that are applying for even the most basic paying jobs, whether it be a McDonald's or a call center. They're lined up around the block. So when we look at this chart, and as we've been seeing for most of the past year, the private sector hiring is continuing to be way behind the growth in our public sector. So most of the job gains actually came from self-employment, which in fact shines a light on the growing weakness in the labor market, especially when you consider the real dramatic increase in business bankruptcies in January. But here's the thing. The pace of employment growth is a misleading indicator because the growth in population outstripped net creation. So in reality, the rate of Canada's increase set another record above 3% annualized. And what the data is showing is that to maintain the employment rate, we would have actually needed to see about 65,000 jobs created last month. Gosh. So at the end of the day, we can see that the job market is actually getting softer despite what is seeming to be an increase in hiring. Now, all of this is to say that we simply don't need 190,000 people coming in every quarter on a go forward basis. It's actually pretty straightforward that as the economy cools, and it's definitely showing signs that it is, our population growth needs to slow. Now, that's one thing. The other thing is that we just need to look at the politics around all of this. You know, the current Liberal NDP government is getting crushed in the polls, and as they should be, because of the very long list of issues, from the cost of housing, the cost of living, to social breakdown that shows up on the news, or on top of the healthcare system that's melting down, which is all being driven by the out of control policy of allowing the population to grow by 1.3 million people a year. So let's face it, it's not really surprising that when politicians are facing the reality of losing the next election, they suddenly figure out how to grease the many squeaky wheels. And we've talked about squeaky wheels many times. And so finally, our federal government seems to have made some decisions. But before I get into that, and I know I've covered a lot of ground here, but one last point, which is one that I think everyone seems to be missing, which is when it comes to temporary workers or international students coming here to Canada, they're actually fast-tracked for permanent residency through a number of different visa programs. And so when you expand the non-permanent resident cohort, it means that in the future, a higher share of permanent resident slots will be allocated to people who are already in the country. So remember, the feds have a cap of 500,000 permanent residents, which means there are basically one or two options they have. They can either bring new immigrants into the country to meet their quota, or they can allocate permanent residency to people who are already here on a temporary basis, which is what they did in late 2020 and early 2021 before they ramped up non-permanent residence visas. Now, if they do that, which they have in the past, the impact is that they're basically just reclassifying people who are already living in the country. And so when you have a big run-up of non-permanent residents like we've had, it has to lead to a slowdown in population growth down the road for exactly that reason. Now, ultimately, when we lift the hood and unpack all the data, we can see that this population boom is going to collapse under its own weight because it's simply not sustainable. And we have to realize that this is not going to be the new normal because it just can't be sustained. Okay, so having said all of that, what does any of it mean? Well, here's the issue that showed up right at the end of March. And that was Immigration Minister Mark Miller came out to say that they're going to reduce the share of non-permanent residents down to 5% of Canada's population within the next 3 years. What all of that means is that in order to get to that population of non-permanent residents back down to the 5% threshold over the 3-year period, and that's of course assuming they're going to continue to grow permanent residents by the 500,000 that they have in the pipeline now, we actually need the non-permanent resident cohort to fall by 600,000 over that 3-year period. So when we do the math on all of this, we can see that within 12, 18 months, maybe 2 years max, actual population growth is going to go from 3.2% to 0.6%, and it's intended to flatline at that level by 2027. Now, all of this is based on the feds actually doing what they say they're going to do, but at this point, we don't really have any reason to doubt them because the alternative is that they're going to get crushed in the next election, which they are anyways. So our population, which has been growing by about 1.3 million, is going to drop dramatically, which means for rental housing providers like us, we will feel a significant drop in demand over the next 3 years in many regions, given that non-permanent residents are overwhelmingly renters, as you know. Now, I know I've said a lot, but I think this will unfold to be a really big issue, and we need to keep a very close eye on the immigration numbers because at the same time, we have new rental units coming online, and the federal government is opening up the checkbook, including a recent $6 billion announcement by Trudeau intended to be used to ramp up more housing. We need to pay attention. Here's the thing, there's always a lag effect. But as we look at this today, the low supply and the high demand, which we've been kind of enjoying in terms of a rental housing provider, could actually be in the early stages of shifting. So as investors, we actually need to look into the future 12, 24 months, even longer, and we need to stay ahead of what's unfolding so that we can actually adjust our plans or our strategies according to what is happening. So there's a lot more to come on all of this, and we'll definitely be keeping you up to date. So I need you to stay tuned to what the data is showing so we don't get emotional, because there's going to be a lot of headlines starting to show up, but we'll keep you up to date. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.